Bitcoin belongs in the pension funds. Now that Bitcoin had crossed the six-figure mark, we got invited back. There's a clear disconnect in the capital markets. My motto has always been, you got to think like an entrepreneur with institutional resources. We wanted to kind of try to take it to the next level and start to build what we're thinking of as more like the Berkshire Hathaway of Bitcoin.
Round of applause for Grant Gilliam and Sean Bill.
Thank you. Well, good to chat with you here on stage, Sean.
Yeah, it's great to be in Tennessee. I'm really enjoying our time here.
I understand you have a connection to this school.
I do. My daughter's a sophomore here, studying to be a nurse, so she'd be surprised to see me up here on stage.
Yeah, my son has gone to soccer and basketball camp here, and afterwards he said, you know what, I know where I want to go to college. I want to go to Belmont, so
yeah,
we'll see.
It's an amazing school. I was shocked that my daughter was willing to leave California, but then we came out and we went through the nursing school here at Belmont. We're like, oh my gosh, this is next level.
So our talk is on Bitcoin as super collateral, and I thought one good way to start is first, like, the idea of super collateral starts with it being recognized as such by the relevant counterparties, whether it's lenders, institutions, investors. And you have a pretty interesting background. You were a hedge fund guy back in the day for quite a while, but then you spent some time at a pension fund out west and went through a pretty long process of educating them and trying to get some adoption on the institutional side. So I think it'd be a good place to start is, why don't you talk about that experience?
Yeah, that was back in 2019, so a little while back. I started out in the hedge fund world in 1994 at the Chicago Board of Trade when it was open outcry. So it'd be like, I'll sell you 500 at a quarter, and now we're doing everything digitally. So it's been kind of really interesting to watch this evolution in the market. In 2016, I stumbled into the Bitcoin ecosystem. So in 2014, I heard friends talking about it. I thought it was interesting. By 2016, it had that price move where it went to 1,200, 1,100, and that got my attention. And I was like, geez, okay, there was something happening here. And so I started dedicating time to it, started buying Bitcoin myself in like the 450 area. And then by 2018, 2019, I had been sitting as a pension CIO for over 5 years at that point. And I was like, geez, Bitcoin belongs in the pension funds, and it's uncorrelated. It has high volatility. It has a very fat skew on the right side of the bell curve, which is what you want as an investor. And so I started thinking about how to position it with the pensions in California. And the first couple of times I brought it up, people look at you like you had three heads. They're like, what is this guy talking about? Why is he, pushing Bitcoin to a pension, the most conservative pools of capital in the world? And the way I framed it for him was that I thought if we could get a 1% to 3% allocation, say we end up in the middle at 2%, Bitcoin at that time was $7,000. You could look at Metcalfe's law and you could make a very strong case for why Bitcoin should be at 200, 250,000, just based on the network effect. And so we kind of wrote that up, submitted that to the pensions, and that was summarily rejected. Kind of started the quest, and it took about 18 months to get it through, but eventually we were able to add a 45 basis point allocation to the pension. And that was at 17,000, roughly. And so then, that definitely kind of was, pretty innovative thing at that time within the pension world.
This is one of the first funds, if not the first.
I believe the first.
Publicly
Yeah, I
announced.
believe it was the first pension fund to actually own Bitcoin and have it custodianed over at Fidelity Digital Assets and, in actual Bitcoin. There are other pensions, I think Houston firefighters, that came in the next year and bought a bigger slug of Bitcoin than we did. We made a very courageous bet there, and I think that's worked out extremely well for them. The Fairfax pensions were in there very early as well. So, there's a few of them that are in there. When we got that in, the following year, I was invited out to the State Association of California Retirement Systems because they were all curious, like, how did we get this through? How did we do this? Could you explain it, please? And so we did. And when we did that, we had maybe 100 people that showed up for that presentation. You got to remember, most of these folks are retired folks that are representing the pensions and the beneficiaries. They're just not comfortable with the idea of digital assets. And it was interesting because, now that, Bitcoin had crossed the six-figure mark, we got invited back in May of this year, 2025. And then I'd say we had pretty much everybody at that State Association of California Retirement Systems conference. Everybody pretty much was in that room. We had a standing room only, 650 people. They were interested. What's going on? How'd you guys do this? This worked out really well. We had sovereign wealth funds from the Middle East that were flying me out there that wanted to, look at this back in 2020. We had the Dutch pensions that wanted us out there to go explain how we did it, because we were kind of the Silicon Valley, pension. My motto has always been, you got to think like an entrepreneur with institutional resources. And that's how we managed those pensions. That's how we stayed in the top decile. That's how we were, a top performing pension for a decade. We did a 10.66 net IRR after all expenses and fees.
So back then, several years ago, it's, in your words, it was some of these groups taking courageous bets. Now, earlier this year, you're seeing a lot of interest from the institutions. So certainly there's been a sea change. Maybe it takes a bit less courage today than it used to. We all know that the Bitcoin ETFs launched earlier last year, played a big role. And even the names of, such as BlackRock recommending allocation, sort of in the same zip code of where you landed at the pension fund.
That was a huge help. Having BlackRock come out in November of 2024 with an official recommendation that, multi-strategy portfolios should include a 2% allocation to Bitcoin provides a lot of air cover for these fiduciaries on these pensions, endowments, foundations, et cetera. Right? Because nobody gets fired for buying BlackRock. It's like IBM. We already have BlackRock in our portfolio. The managers have been due diligenced. It's easy to add an ETF that BlackRock has sponsored. So I'd say the combination of the BlackRock IBIT ETF with Trump coming into office has completely opened up the doors for institutional investors to now look at this seriously.
Yep. And so where do you think we stand today? I mean, there's increased interest, but I wouldn't go as far to say that Bitcoin is being recognized, quote, as super collateral yet to a wide degree. But where do you think we stand, and how do you think that evolves over time? Are there certain catalysts that you expect to be drivers of that?
Yes, I think, it's really kind of helpful to have a mental model of how a capital market evolves and develops. And so if you think about high yield markets, that's a good analogy because it was an asset class that kind of came out of nowhere. Brad Kickman wrote the first studies on it in 1955. Michael Milken and Drexel kind of really popularized these ideas of, in the 70s. It took 20 years really to go from an idea that this market was mispriced to actually having a capital market that started to try to take advantage of that mispricing. So I think with Bitcoin, if you think about Bitcoin as an asset right now, which I think is a good way to kind of think of it for where we are today, we do think that, thinking of Bitcoin just as like digital gold vastly understates the potential of Bitcoin long term. But where are we right now? We're kind of proving out the store of value. Right? Eventually, hopefully, it becomes a monetary asset. So I kind of feel like there's kind of two-stage process here in developing a yield curve for Bitcoin. First stage is we have to look at it from an asset perspective. And right now you do have borrowers and lenders that are making markets in, let's call it 1 year and shorter Bitcoin loans, right? There's some of them here in the room like Devify and Unchained and different folks. Now, over time, you would expect that if Bitcoin is able to evolve into a currency, that it would eventually have its own yield curve that would be similar to like a dollar curve or a JGB curve or a Bund curve or what have you. But that'll be a second iteration. That'll be further down the road. That'll take time to evolve. Right now, there's folks here from the TradFi world, and there were some questions at the Custody and Treasury Summit about repo markets and the ability to lend Bitcoin and borrow Bitcoin. And I think, those questions weren't even being asked 5 years ago. Right, so now people are asking the questions: how do we develop a repo market? We did our deals with Cantor and what have you, and they're trying to work on this. They're a very big player in the treasury market, and they're trying to figure out how to sort out a repo market for Bitcoin.
Yeah, I think there's going to be greater acceptance that comes with further education and further adoption. Partially driven by price is when people get more interested in it.
Yes.
In the interim, there can be tools there's lots of solutions to help bridge us from here to there. It's education, but it's also building tools, building technologies, introducing interesting financing structures. We've seen on the 1031 side, interesting ideas around fusing Bitcoin with other forms of collateral. Like we all, as believers in Bitcoin, view Bitcoin as super collateral, but we also recognize people outside of this ecosystem still see the volatility, which is undoubtable, and some problems that arise from that. And so we've seen with a company called Battery where they fuse Bitcoin with traditional assets and have a collateral package that can offer superior characteristics for borrowers in that regard. But that's another way that we might see.
Yeah, I would definitely say what Andrew Hone and the fellows at Battery are working on is very revolutionary stuff. They're really at the tip of the spear on this stuff. So if you think about Bitcoin and as an asset and fusing it into a more traditional asset, you would think that would reduce your financing cost, right? If you look at Bitcoin, it's a limited supply of 21 million units. There are no liabilities associated with Bitcoin. Compare that to, say, a treasury bill, which has $37 trillion of liabilities associated with it, not including our Social Security liabilities, not including our Medicare liabilities, not including all the other liabilities that we've accrued. Or if you look at Euro debt or Japanese debt, similar arguments can be made. So if you say that Bitcoin as a asset, where should it trade? It should trade inside of a treasury bond or a JGB. Right? From a pure credit perspective. Now, if you fuse Bitcoin, which has been compounding at 65% for the last 10 years, and let's just say, for argument's sake, let's cut it in half and say the next 10 years are maybe 30%, right? If you fuse Bitcoin to a real estate loan, you would expect that real estate loan should have a lower financing cost. So the work that the Battery folks are doing, I think, is really kind of revolutionary stuff and is really going to try to push the ball forward. I think we'll see this spread into other types of assets over time. It could be into all kinds of structured products, could be into auto loans, could be into credit card receivables, where all kinds of different areas. And this is where it's really interesting, for folks in the audience, there are open source tools that you can take advantage of to try to get into this space. So Blockstream, is probably the first Bitcoin treasury company that's still operational today. It was founded in 2014, has always run on a Bitcoin standard, a Bitcoin treasury. At Blockstream, we make layer 2 technology that's open source, right? It's called Liquid. Go check it out. There's $4 billion of total value locked on that. That's real world assets like, small business loans out of Mexico to a hash rate that's being tokenized and everything else in between that you can think of. We have the software called the Asset Management Platform, which will help you basically create a walled garden. Again, you can go access this stuff for free and build. So I think for people in the audience, it's a super interesting time for them because, it's like being in the 1970s in high yield. It's early, right? Nobody's there. You have very little competition. If you can figure out how to, finance the future on Bitcoin, the tools are there for you. And you just have to dedicate your time and energy to solving those problems.
So from a builder's or investor's perspective, where do you see inefficiencies? I mean, you mentioned yield curve, for example, establishing a yield curve on Bitcoin over time, but are there other areas that jump out to you in the capital markets or in lending where you would say, there's significant inefficiencies today. You sort of see the future on where it's going, and if you're a builder, you're an investor, like where would you be most excited to focus your time?
Yeah, so I think that, there's a clear disconnect in the capital markets. If you look at Bitcoin as being this, unbreakable asset that should be traded inside of a treasury bill, but yet you can go write a loan with the Bitcoin as collateral and earn low double-digit yields. That's a super inefficiency. And so you want to pile more capital into that market. I think, we just released a new programming language at Blockstream called Simplicity. And Simplicity is 13 lines of code that are meant to basically help you develop smart contracts on the layer 2 technology. And of course, Bitcoin is regulated under the CFTC. So you don't run into the problems that you have with the EVMs and try to build on Ethereum, right? Where you may be questioned as a security and have another issue. So I think if I was a builder, I'd be hyper-focused on tokenization of assets. I'd be hyper-focused on trying to build out capital markets. I'd be hyper-focused on how do we get Lightning working more efficiently, right? There's ways to dedicate capital into nodes, and that's something that we will be looking at. So I wear two hats. I'm also the chief investment officer of the Bitcoin Standard Treasury Company. And so if you think of our Blockstream as our infrastructure service provider of technology software to the ecosystem, then that's kind of building out that infrastructure that you need to build on. We have the Bitcoin Standard Treasury Company that's basically going to be a catalyst to try to fuel and push assets into the ecosystem. So, I think that for folks that are interested in the space, there's a lot of opportunity. You're at the very beginning here. I used to get this question in the pensions. Are we too late? It's like $7,000. You were in there at 400. I'm like, well, look, it's going to $1 million, right? I mean, you're not too late. And we'd love to show that graph that MicroStrategy made so popular with the little orange dot on the capital markets graph, where, Bitcoin is a $2 trillion market cap right now. You look at the rest of the assets out there, there's 900 trillion plus of assets. That's your playing field for the entrepreneurs that are in the room that are thinking about, how do I carve out my niche? Well, you have a $900 trillion market that you can tokenize, right? And so I think there's just a huge amount of opportunity for these folks. It's like, it's like being in the internet in 1994.
Yeah.
Or mobile, when the iPhone came out in whatever, 07 or whatever it was. It's early.
So let's talk Bitcoin treasury companies just a little bit, because as you mentioned, Blockstream has had Bitcoin in its treasury since 2014, and now you've got BSTR. Blockstream, as you mentioned, has been building businesses and tech and doing open source contributions for quite a while. So it's not just a Bitcoin treasury company that's holding Bitcoin, but it's building things.
That's right.
And also leveraging, I'd be interested to hear, how do you guys think about your Bitcoin treasury? How do you use it as collateral to build your business?
Yes, yeah. So Adam Back and I co-founded the Bitcoin Standard Treasury Company to basically try to be a catalyst for the ecosystem, try to really help propel these markets forward, because we've noticed there's a gap in the capital that's pushing in, right? And so we announced in July that when we were forming the Bitcoin Standard Treasury Company, that it would be an actively managed treasury. So if you think about what existed before that in July, MicroStrategies and other treasuries are static, right? They issue fiat bonds or issue preferred equity, and they buy Bitcoin, and they capture that increase in Bitcoin, which is a tremendous trade, right? And it was a revolutionary concept that those guys have brought in there. And I do think that you're going to see this, the work that Saylor has done in terms of creating the Bitcoin treasuries will spread into a lot of other corporate treasuries over time. It would be surprising to me that if in 7 to 10 years that we don't have most corporate treasuries owning Bitcoin on their balance sheet. But there are 180 Bitcoin treasuries. There are, I think, maybe 4 or 5 that matter. The rest of them are kind of also rans. Our idea is that, there will be just a handful of winners in this space. We want to make sure that we are one of them. We raised $5.5 billion approximately in about 36 days. So we went from back of napkin to, wrapping up our fundraise, 36 days. And what was important to us was when we went to Wall Street, we didn't want to just come in and issue convertible notes and preferreds and then go buy Bitcoin, right? We wanted to kind of try to take it to the next level and start to build what we're thinking of as more like the Berkshire Hathaway of Bitcoin, an actively managed treasury, a fortress balance sheet that's going to be a catalyst in the ecosystem. So when we went out, we told Cantor, we want to do the first Bitcoin-denominated equity pipe that's ever been done in the United States. And we got it done. There was a lot of resistance. There was like, we haven't done this before. We don't have this all mocked up. We're like, we can do it. Let's do it. Let's do like the first Bitcoin-denominated equity pipe for investors. And we got 5,000 Bitcoin that came in on that. So, that was, I think, really important to us to kind of flip the script on Wall Street and say, okay, if you want our business and you want our underwriting fees, you have to do this as well. And so we kind of bundled it. Now we're looking at our next piece is trying to do a Bitcoin-denominated convertible note, so the first debt instrument in the United States. And again, these are things that are happening in Europe. Hat tip to the Alt-BG, to the H100 in Sweden. These folks are doing it over there. And we're like, it's important to bring it to the United States and to open up these markets. And so, that's been our big mission. I'd say that the other big differentiator between us and the other treasuries is that rather than just sitting on the Bitcoin and holding it at Coinbase, but we have our own ideas on custody, and we talked about that yesterday. The treasury balance that we're managing, we have been developing yield strategies. We've been looking into this for the last, I'd say 9 months. We've got this laid out. We've got, the strategies in place, whether it's writing covered calls, whether it's funding, lightning nodes, whether it's insurance plays, all kinds of different strategies. We've got alpha strategies that are already lined up, which are to try to improve the capital market side of the Bitcoin ecosystem. So, if you look at Deribit, which has 85% market share in options, you would think that the options curve would have a smooth smile. And it should have a smooth smile. If you've read your Sheldon Nateberg option pricing and volatility models, the curve should be smooth, but it's not. Right? It's all kinked and funky and what have you. So there's all kinds of arbitrage opportunities there. So we want to push capital in there to make that curve smooth eventually. Now that eventually puts us out of a job in terms of, as we make these markets more efficient, there's less for us to do in the alpha space. But we think that'll take years to actually to get that to our goals there. But there's great opportunities in high frequency trading to make these markets more liquid, to make them deeper, the options markets, the inter-exchange arbitrage, the basis trading. Basis trading is just a financing cost, right? For, spot versus futures. You would think that it would be financed, that it would all arb out to an equal rate around all the exchanges. It doesn't. There's a lot of variability, a lot of variance, and that comes from the credit quality of the different exchanges that you're financing these trades on. So lots of interesting avenues to go on. Then we want to look at, once we get that built out and once we are pushing the capital into those markets, our next step will be to look at really going into building out wholly owned subsidiaries to really take into that Berkshire Hathaway model.
Yeah, I think another just absolute truth about Bitcoin is that no matter when you got in it, everyone probably felt like they were too late. Yeah. And then once you get in it, you realize that actually it's very early. And so what does that mean for builders or entrepreneurs or investors is that when you're early, there's lots of opportunities still out there to go for.
Yeah, and I think that's really important to remember. 16 years old here as a teenager. For people that are in the room, they're much more interested in Bitcoin. It may seem like it's been around for a while. A lot of people here probably feel like they've been, toiling at this for a long time. But when you step out of these rooms and you're out there talking to the sovereign wealths and the pensions and stuff, they still haven't got off zero, right? They're still trying to figure out what's going on. So that creates a huge opportunity. There's just, I think that, for young people and for older people that have experience with TradFi, team up, because that's where you get these huge synergies where you can unlock these opportunities.
What's been the biggest surprise for you as you've transitioning now full-time in the space?
Well, I will say, my wife was like, geez, you want to leave your hedge fund, like it's 10 minutes from the house, you're making a great living, you're doing credit, it's like you got it all wired in. And I used to ride my bike to work, which I really loved. And, she's like, are you sure you want to go into something entrepreneurial like this where you're going to be grinding? And I was like, I've invested in about 40 different startups over the years out in the Silicon Valley and, got a couple of unicorns in there, and I've watched from the outside. And so, I pinch myself every day that I'm working with Adam and our team, Michael and the fellas here. It's kind of, not something I would have guessed that would have been happening 3 years ago. But for me, every time I hang up the phone with these fellas, you got Christian Decker, you got Adam Back, you got all these different fellas. You got all these, brilliant operators within Blockstream and within Bitcoin Standard Treasury Company. That for me, every time I hang up the phone, it's an interesting conversation. And that's kind of what it's about for me. It's like, okay, I could go follow my playbook for credit, and I know how to be. I won 2022 and 2023 multi-strat credit hedge fund of the year back to back, right? You follow your playbook, you know how to win. Here, we're in uncharted territory. We're in the jungle with a machete, hacking our path. And that to me is super interesting and super inspiring.
Yeah. Well, I think Bitcoin is unequivocally super collateral. It's going to take a lot of effort for more people and more institutions to recognize that, but super exciting times ahead. So appreciate the discussion, and thanks for talking.
Yeah, thanks for having me. Thank you. Great to be in Tennessee.